Welcome to Accounting's 5 things you should do for your finances in the fourth quarter. I am Jenny Q. I'm excited to have on the founder and president of Spark Accounting. She is also a CPA, CFM, so many designations behind her name, and she is a profit-first professional. So she's just the person to talk to you about what you need to do to get your finances in order during the fourth quarter. So I am excited to bring on Julie Babcock-Hyde. Hi, Julie. How are you today?
Good. How are you doing?
I'm doing well. I cannot believe it's already Wednesday. This week is flying by.
I can't believe it's already fourth quarter is what I can't believe. I don't know how we got into October already. So.
Spoken like a true accountant.
Exactly. I do not know how it happened.
Well, I would have to agree with you there, but I am really, really excited to dive into this topic because this is why we have CPAs in our life, to keep us on track with these things, because we're so busy running our businesses.
Exactly. It's important to kind of just get on top of this stuff so that you don't end up with a crisis at the end of the year.
Which, have you seen that frequently?
Oh, absolutely. We've got people that we literally just finished their 2016 books for them.
Okay. All right.
Because they weren't on top of it last year. So we want to help everybody avoid that if we can, because you can't make decisions if you don't know what's going on with your business.
Well, exactly. I love that. So let's go ahead and jump in to number 1. It is 1099 and W-2 prep. What do people need to know about that as we're in the fourth quarter?
So if you've got people working for you, either as an independent contractor or as an employee, there's reporting stuff that we have to do. The IRS wants to know that they made money so they can get their money, right? So we want to make sure that we're ready for that. Too many people wait until January. They're due January 31st, but they wait until January to try to round everything up. And then it's kind of a crisis in January to try to gather all this information. So if you can start prepping for it right now, that's great. So with 1099s, we need to issue a 1099 generally to anybody that we've paid over $600 to, for services or for rent or other income that is not a corporation. Now, everything I'm saying today is just the general rules. There's exceptions to every rule because it's the IRS, right? So we want to make sure that that we have the information we need in place early so that we can get those generated. So the number one thing you can do right now for 1099s is just to start looking at your vendors, see who you've paid last year or in 2017, and see if you've got a W-9 on file for them. The W-9 is the form that basically says, here's my official entity name, here's my tax ID number, here's how I am taxed. Because remember how I said there's an exception for corporations generally?
Right.
So if they check the corporation box, you don't have to issue them a 1099.
Okay.
One other little secret about 1099s is if you've paid them via PayPal, a credit card, or a debit card, the payment processors are actually going to take care of the 1099s for you.
Wow.
You don't have to issue a 1099 miscellaneous for that. So if you really hate 1099s, pay everybody through PayPal or on a credit card, and then you don't have to worry about it.
That's pretty amazing too. And I have to admit, I have been guilty of heading into either the end of the year or the beginning of the next year and saying, oh my gosh, I need a W-9. Hurry, please, hurry fast.
Right. And it gets hard when you're asking after you've already paid your vendors.
Right.
Sometimes it can be hard to get that W-9 because sometimes they're like, oh, I hadn't actually planned on reporting that income.
Ooh.
And so then you can end up with a compliance problem where you're trying to issue a 1099 to somebody who doesn't want one.
Okay.
So you can get that up front when you first get a new vendor. That's the best. That's the absolute best. But if we can at least get on it fourth quarter so we don't have a crisis in January, that's fine too. So that's the 1099 side of things. Let's talk about the W-2 piece.
Let's do.
Okay. Most people are probably using a third-party payroll processor, which means they're going to process your W-2s for you. However, there's still stuff that you're going to need to do. One of those things that you're definitely going to want to make sure you do is have your employees verify that the addresses you have on file for them are current. Because one of the biggest problems and the biggest reasons that W-2s have to get reissued is because they went to the wrong address. So check with your employees, make sure you've got their current addresses. The other thing you really have to think about is W-2 adjustments. The straight payroll piece of things is easy, but there are sometimes taxable fringe benefits that you need to do adjustments on the W-2s. And if you have not planned for those ahead of time, again, you're kind of in crunch chaos mode in January, trying to get all of those processed in time for your cutoff date for W-2s.
Okay. All right. Great to know. And so we get the W-2s done. And then what's our next step, our number 2 tip? So we have to do the 1099s, the W-2s. And what's number 2?
Number 2 is let's make sure that your books are caught up.
Okay.
Now, I know so many people that think, that the accounting process is horrible. And the reason they hate it so bad is because they wait until January, February, maybe March, because they know they have a tax filing coming up to actually get their books done. And when you are doing a whole year's worth of data at once, you know what? We do it, but it's a lot of work and it's intense and you spend days and days just trying to get it all done. So if you can start working on that now and getting things up to date, you're going to be ahead of the game.
And what does that look like? Getting caught up, like making sure the books are in order. What does that look like?
Well, depending on what accounting system you're in, if you're in QuickBooks or QuickBooks Online or Xero, whatever you're in, you want to make sure you've got all your transactions into the system.
Okay.
Most of those accounting systems have ways that you can actually import your bank lines into the system to reduce some of the data input for yourself. And that's a nice thing. But once you get the data in, it's not just enough to have it in. You want to make sure you've actually reconciled your bank accounts to make sure that the balances that are showing up in your accounting system are accurate.
Okay. All right.
Yeah. And
all right.
Really, and I will say this, if you really, really hate doing this part of your business, find somebody to help you. You don't have to do everything in your business. And
Who would we look to help? Like, who would we need to hire to help do this?
You want to find a good bookkeeper. Okay. We do bookkeeping at Spark Accounting Solutions. There's lots of solutions out there to help you. But what you want to do is find somebody that is familiar with your software or familiar with your industry and can help you get some numbers ready.
Okay. So if you're using QuickBooks, find a QuickBooks Pro. If you're using
Exactly.
Okay, got it. Perfect.
Xero, fine. Yep, exactly.
Okay, excellent.
Exactly. All right. And the thing that you have to know about getting your books up to date, if you don't have your books up to date come January, how are you going to know how much you paid people to issue W-9s, to issue 1099s? And you're also not going to have the data to take care of some of the next couple steps that we're going to talk about that we should be doing this quarter to be prepared for finances.
This is just the preparation part. This isn't even filing all the taxes.
That's right. That's right. This is just figuring out where you're at with your business. And the thing about keeping your books up to date regularly is it's a lot less work and you actually have information about what's going on in your business. So that's important.
Right, to make the decisions.
But we need that information also for number 3. Okay, are you ready for number 3?
We're ready.
Okay, number 3 is fourth quarter is a great time to start doing some tax planning.
Okay.
If you haven't done it yet, you need to think about it. Now, everybody has some different goals sometimes when it comes to tax planning. Some people actually want to show more taxable income than last year, and some people want to show less. And most people are like, why would anybody ever want to show more taxable income, right? A lot of small business owners, when they're trying to get a loan or a mortgage, they may need more income to qualify for what they need. Small business owners are usually in a unique position that we can deduct more of our personal expenses than the average person because we may have a home office. We may be using our cell phone for both business and personal. And so some of those things get deducted on our return, but it also reduces our income. And that income is what we use to qualify for mortgages and loans. So you want to make sure you know what your goal is when you start doing tax planning. Do you want more income or less income? Now, most taxpayers are cash basis, which means you're going to record the revenue when the money comes in, and you're going to record the expenses when the money goes out. So we've got a little bit of control over that, right?
Right.
So when you're looking at the revenue side of things, if you want less taxable income, you want to delay your customer payments. So maybe if you normally invoice your customers on the 10th of December, and they usually pay by the 25th, maybe you delay that and don't invoice them until the end of December, so that money doesn't come in till January. The money's still going to come in. It's just a timing thing of which year it comes in. Same thing with if you want more revenue, you want more income. If you've got receivables outstanding, you can kind of get on those and start doing collection calls and see if you can get them in by December 31st to bump your income up. And we can do the same timing issues with expenses. If you've got expenses and you've got a choice of paying them in December or January, if you need more expenses, pay them in December. If you need less expenses, pay them in January. So there's some timing things that you can do with that. The one thing I always caution clients on is do not spend $1 to save 25 cents, 30 cents, or even 50 cents. A lot of people will go to their accountants and the accountant will be like, oh, you need to buy equipment. Well,
oh, right.
Don't buy equipment unless you really need to buy equipment. Why would you spend $1 to save 25 cents on your taxes?
Yeah, no, we've heard that. Like I've heard that for as far back as I can remember. Hurry and buy stuff to save money on your taxes,
Yeah.
But that makes so much sense. If you don't legitimately need it, why would you do it to save a percent?
All you're doing is destroying your profitability and your cash flow. If it's stuff you need, by all means, buy it. But if it's stuff that you're buying just to reduce your taxes, all you're doing is spending $1 to save 25 to 50 cents.
That's a great
point.
It
probably doesn't make sense.
And so what about charitable contributions as a business?
Depending on how you're taxed, charitable contributions are either a business deduction or they flow through to your own itemized deductions. And so that's important to know how you're taxed. If you're taxed as a corporation, like a C corporation, the business itself can get that deduction. But if you're taxed as an S corp or a partnership or just a sole proprietor, those donations are actually going to flow through to your itemized deductions. So if you're not itemizing deductions, if you're just taking the standard deductions and you're making charitable contributions simply to get the tax deduction, it may or may not work out the way you think it's going to. So it's important to check in with your accountant and see, if I do this, am I going to get the benefit that I want out of it?
Good to know. Very good to know. Wow, there's so much to know. All right, are you ready to hop on to number 4?
Let's hop on to number 4.
Start your 2018 forecast.
So one of the powerful things about having information from 2017 is that we can use it to start figuring out what 2018 might look like. And as you start working on a 2018 forecast for your financials, for your business, I really encourage everybody to think about, what is your end goal financially? What are you really looking to get in 2018? Do you want more income for yourself? Do you want increased profitability for the business? Do you want to give your team a raise? Do you want to make sure you have enough money to cover employee benefits? Figure out what your end goal is, because that's going to be important as you're developing that plan. Okay. So once you figure that out, you're going to start going down through the different categories. And let's start with revenue always. Figure out what your revenue goals are for next year. How much growth do you want to see? Is it going to come in the way of new customers? Is it going to come in the way of getting more sales from existing customers? Is it going to come via pricing increases, or all three? And start with the revenue side of things.
Okay.
Once you get revenue down, the next piece is the costs that you have to incur to make that revenue. So, for example, with my firm, if I was going to add new clients, I would need additional team members to help with the work behind it.
Right.
I would need additional software subscriptions to cover those clients. If I was selling product, I would have to buy the inventory to sell. So you want to think through all of the incremental costs that go with adding a new client or selling more of a service so that you can build up that your cost of goods sales section of your forecast.
Right. Makes total sense. And how many business owners in your experience actually sit down and do this for planning?
Very few actually sit down and do it, but I think we all have been through enough business coaching, or we've listened to enough, people that have stressed the importance of having a plan. Businesses that have a plan are more apt to succeed in meeting their goals. And so it's important to take some time and put stuff down in writing and figure this out.
What if you're a business owner and you're like, I don't even know where to start. I don't even know what are like realistic goals. Should they set realistic goals? Should they set like pie in the sky goals? Like, what do you recommend?
You know what? I always, when I'm working on forecasts with my clients, I always like to find out what type of person they are. I believe there's two types of people when it comes to goals.
Okay.
There's the people that need a realistic goal because they are going to feel like failures if they don't hit it.
Mm-hmm.
And for those people, it's really important that you set a realistic goal and you also set an incremental goal because it's hard to be like, okay, I need to make an extra $200,000 of revenue this year. Well, break that down into smaller pieces. What does that look like? How do you accomplish that so that you can be successful? But so we've got the people that need realistic goals, and then we've got the people that do like the pie in the sky goals because they're going to reach for it and they're still going to feel awesome even if they came close and didn't hit it. And so knowing that is important. Knowing that's really important.
That's really good. So know yourself while you're setting, before you set your goals so that you can know what kind of goals to set. I love it.
Exactly. And I would encourage people, there are programs out there that we use with our clients to help them develop their forecast for the next year, develop their budget. And we really believe in getting a forecast that you can have really specific goals identified so that you can understand what the underlying actions you need to take are behind them.
Okay. Awesome.
It's really easy. Yeah, it's really easy to say, I want to make another $100,000 in sales next year.
Right.
But it's even easier to say, okay, to get that extra $100,000 of sales, I need to sell 10 widgets and 20 service packages. And once you know, hey, this is what I need to do to get to the target that I'm looking to get to.
Right.
Now, all of a sudden, you know, okay, 10 widgets. How do I market those? Who's going to buy those? It's a lot easier to take action on more specific goals than it is, I need more revenue.
Right. It's a very different way of looking, and especially for business owners who aren't in the financial industry, this is a new skill to learn.
Yes,
it's just absolutely. A totally new skill.
Absolutely. And it's one of those things, again, if you don't like crunching the numbers and you need help in the background, reach out to your accountant, reach out to us, reach out to somebody and ask for help to develop that forecast.
I totally agree. I get the best, like when it doesn't matter really any area of my life, when I hit a place where I'm like, I don't know quite how to do this, sometimes embarrassment because we don't already know keeps us from asking for help.
Yes.
But you can't know what you don't know.
Yes, it's true. Yeah. It's true. Yeah. And there's a lot of stuff to know when you're in business and you can't know it all.
A lot of stuff. Yeah. Okay. Let's go to number 5. Plan for your retirement contribution.
So one of the things I always talk to my clients about, because this is something small business owners tend to short themselves on.
Okay.
When you work for a corporation, they usually provide you with a whole host of benefits, right?
Right.
You've got health insurance, you've got disability insurance, probably have some life insurance, have some kind of retirement plan. You've got all these plans that are there and available for you as employee benefits that you want to make sure that you are taking care of for yourself as well as a small business owner. So retirement contributions are one of those big ones that I like to talk about. Because number one, it's a great tax planning opportunity. And number two, it's also a great way to reward yourself for your hard work and make sure that you can retire someday. So there's a lot of different plans available to a small business owner. And so when I start talking to a small business owner, I'm only going to talk about 4 of them today. There's even more than that. But so when I start talking to a small business owner, the first thing I usually find out is how much money do they actually want to put away? Because that's going to impact the decision. We have available to us traditional IRAs and Roth IRAs. I think most people are familiar with what those are. Traditional IRA, you put the money in and you get a tax deduction now. A Roth IRA, you put the money in and it's not tax deductible now, but it's going to continue to grow and it's not taxable when you take it out. So there's pros and cons to both, but you can do up to $5,500 a year if you're under 50 and up to $6,500 a year if you're over the age of 50 and put that into a retirement account and have that to save.
Okay.
That's just an individual thing. It doesn't really have anything to do with your business per se. Another option is a simple IRA. Now with a simple IRA, if you have employees, you're going to be making a small contribution to your employees' accounts. But only a small contribution. Your employees can actually contribute themselves. And they can elect to contribute up to $12,500 if they're under the age of 50 and $15,500 if they're over the age of 50. These numbers change every year. So you always want to keep up to date on where those numbers are at. But so the nice thing about a simple IRA, if you have employees and you can't afford to make a huge contribution for everybody, it's a nice way to give them a little bit and still give them the opportunity to save for retirement plan. Another retirement plan that's out there is called a SEP IRA. And with a SEP IRA, it is totally employer funded. So if you have 5 employees and you want to contribute 25% to your own SEP IRA, you're going to have to contribute 25% to all of your team members.
Okay.
So the ones that are eligible. So you want to make sure you think through that before you go down the SEP IRA route and make sure that's what you want to do. The last option that most small business owners have, even if you're just a single owner business, is actually a 401k plan. And with a 401k plan, as an employee, you can put up to $18,000 a year into that 401k, plus catch up if you qualify for it. And then the employer can do a matching contribution on top of that. So that can be whatever the plan is for that employer. So a lot of employers will do, 50% of the first 6%. You've seen those formulas before.
Right.
But so those are really important ways to make sure you're taking care of yourself as a business owner. Ultimately, a lot of us think about our retirement plan is going to be selling our business. And that's fine and dandy. That definitely can be a piece of your retirement package. But we want to make sure we're saving so that we are not stuck working forever. Even if we love it, there comes a time when it's time to retire or cut back at least. You want to make sure you're set up for that.
Okay, that's a great point, a really great point. So looking at the top or the 5 tips that you've given, the 5 things that you should do for your finances in the fourth quarter, let's just do a quick recap of those. And then I also want you to tell me which one to start with.
Okay, perfect. Okay, so the first one is start preparing for 1099s and W-2s. Make sure that you've got the data that you need so that that's not a crisis. Make sure you've verified mailing address. Make sure you know what W-2 adjustments you have to get done. The second one is to get your books done. If you are behind on your bookkeeping, get caught up now before you have 12 full months to do. Right now, you only have 9.5 months to do, which is not quite as bad. So start getting on that and get ready so you have the data to do other things. The third one was to go ahead and do some tax planning. Meet with your tax accountant. Talk about what's going on. Talk about where your income levels are at. Talk about what your goals are for your income levels. And figure out what you need to do between now and the end of the year. Most tax planning opportunities happen between now and December 31st and are not going to be available to you on January 1. So make sure you get that on the calendar. The fourth one was to go ahead and start working on your 28 forecast. Know what your goals are. Know what you need to do to meet your financial goals for 2018. And the fifth one is to start to plan for your retirement contribution. Most of those retirement contributions don't have to be made by December 31st. But if you can start saving, if you haven't saved anything up for them, if you can start setting money aside so that you can fund those, this is a great time to do it.
And so were those in order of how to start, how to take action?
Those were the 5. I think the number one most important thing is to start getting your books done. If you don't have your records up to date, you really don't know what vendors you've paid. You really can't do tax planning until you know where you're at right now. You can kind of start on your 2018 forecast, but it's really helpful to have a baseline of what you're spending right now. And retirement contributions a lot of times are based on how much money you've made. And if you don't know how much money you've made, you can't start planning for that. So get your books going.
Get your books going. You heard it here. Awesome. Julie, this was amazing information. Thank you so much for sharing this.
Hey, thank you for letting me talk about it.
No, I love it. I love it. And thank you to all of the viewers, the live viewers and the replay viewers. Thank you so much. If you have any questions, go ahead and leave them in the comments, and Julie will make sure and circle back around and answer those questions for you.
Perfect. Yes.
All right.
Keep an eye out.
All right. Have a great rest of the day, everybody.
Thank you.